Hello and welcome to the webinar. We're going to be focusing on the pound US dollar. My name is Brian Kahn. You have my email there. You have the dailyforextradingedge.com site, the collaboration site that IBFX puts together. And I encourage you to head that way for the different analysis. I posted there last night with a fundamental preview as well as some technical information. I try and post there quite frequently. And then you have my website there if you have any questions about what I do as far as working with individuals and also teaching more about trading psychology, linking in with accounting, trade risk, and then the technical and fundamental analysis, of course. Let's get into it with a couple of disclaimers, and then I'll let you know how you can type in to ask any questions. Volatile markets disclaimer. In volatile or fast-moving market conditions, stop and conditional orders become market orders to be filled at a prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed. Substantial losses may still occur. So if you want to, and I'll just type it right now, but if you want to ask any questions during the broadcast, please use the questions function, so I'm just sending a message right now. All right, so an outline, we'll talk about fundamental analysis. I'll give you a quick catch-up since I spoke to you a couple weeks ago. Technical analysis, and that's where we'll be focusing on the pound US dollar, and we'll be keying in on any fundamentals that could affect the technicals in that pair, and then we'll wrap up with just providing you a page with some links and resources, and again, answering any of those questions. So fundamental analysis, again, I stress the importance of because right now we seem to be in a fundamental landscape where central banks seem to be driving interest rates as they're talking about accommodative policy and things like that. We know that lots of central bankers are in Jackson Hole right now, and we know that there was some rhetoric coming out of the European central banks while they were there. Other fundamental events to be aware of coming up would be in a few weeks the Federal Reserve is going to be talking, and lots of people, analysts, think that they're going to be tapering, or at least give us their schedule of tapering, or a little bit more defined schedule of tapering. And obviously, you also want to pay attention to other fundamental events, such as the economic calendar events in your various currency crosspairs that you're trading. Your broker does a great job of keeping you informed through different collaborators talking about fundamental analysis like myself, and through webinars tonight, and then also the link to forexfactory.com where you can get that schedule of regularly published events. You can also use TV stations, other market sites as well. So technical analysis, 3 key words: trend, which way is the money flowing; support, where are buyers stepping in; resistance, where are sellers stepping in; and then any relationships you can use. Fundamentally, can you put together what the Federal Reserve or the central bank or the Bank of England is talking about, and can you look technically to say the pair is overbought or oversold, or can you use other markets such as interest rates, obviously in the U.S. going higher, or commodity cross pairs where you have gold and the Australian dollar, or oil and the Canadian dollar. Can you find any relationships to say this is doing this, I think my cross pair will do that? And that's what we call a trading edge, and that's what traders are looking for, is I believe I should put on this buy or sell of this specific pair because of this reason, or that reason. So focusing on the pound and US dollar, don't forget about the macro fundamentals, which again would be the Bank of England and the Federal Reserve. In this pair, interest rates, and I just put one in here because I know that the pound is kind of close to the regions of the world with the European Central Bank, and Mario Draghi, he had a promise to keep the euro below 135, and he said that, and so that's what you want to be looking for. Can you get any information from the central banks as they talk about their specific currency? Again, because I'm just talking about macro fundamentals because Europe is close to, in proximity to Europe. Obviously Europe has been something we're talking about, but again, the pound is its own currency. The European currency is their own, and so a lot of you might be trading the euro versus the pound, so you're obviously paying attention to those two. But I just wanted to throw in that part of the world as it touches on, is close to the pound as it relates to the U.S. So upcoming potential reasons for movement, again, that's where we pay attention to that Forex Factory economic calendar. That's where you pay attention to dailyforextradingedge.com, and you are aware of any of those events coming out. So getting into the technical focus, trending or range bound, that's what we'll look at. Can we find key support and resistance levels? Can we put any other technical analysis tools on, such as moving averages, Fibonacci's, chart patterns, things like that? And we're looking to create sound trading plans with a trading edge, whether it's fundamentally a fundamental edge or a technical edge or both. And obviously, no matter what time frame you're trading, most people are short-term traders in foreign currency. I still think it's important for you to look at long-term charts to be a really, really proficient short-term trader. So let's leave the slides here really quickly, and we'll switch programs over to the IBFX MetaTrader 4 platform. And just because I touched on the euro, we may as well bring it up. And we have, I was talking about that 135 level. This is a daily chart, so you're looking at about a year of data. I'll put my crosshairs up here. And I said Mario Draghi doesn't want the euro to go above 135. Obviously, a higher euro is bad for European exports. So we haven't been above 135 really since back in February of this year. Okay, so just keep that in mind that we're right there at that resistance level. Again, that's that red horizontal trend line, and I actually did a webinar on horizontal trend lines a few weeks ago. So now we go into the pound, and the pound looks like we can draw a horizontal trend line as well, right in this area that we're at right now. So 1.5733. We've done well climbing up to it. We might be able to draw a diagonal trend line, maybe connecting these bottoms. Again, very rough, but something like that. Maybe that's where you're looking for support to come in. I could probably draw what I call my railroad tracks right on the top here, and something like that, some kind of resistance there. So we're just in that trend channel, but obviously there's a lot of people that are playing this resistance line here up at 57.33. So that's a long-term chart, and I think that looking at it long-term makes you a better short-term trader. A short-term trader might be using this resistance level, risking 15 pips to make 30 pips. A long-term trader might be using that resistance level to risk 150 pips to make 300 pips as it comes off. And if that's the case, both seem to do pretty well, as we went from 1.57 down to 1.5533. So 200 pips we backed off over the past week or so of trading. So that's on the daily chart. We can go down to a 4-hour chart and shows that uptrend, the resistance line at the top and the support line. We're right back down at that support line. So as you go down to the smaller chart, are you looking to be a buyer here, a day trader, swing trader, intermediate trader, risking 10 pips, 20 pips, 30 pips, 40, 50 pips to make 15, 30, 60, 70, 80 pips as it bounces back off that? Again, fundamentals trump all technicals, so you have to be very, very aware that if there's anything coming out, speakers, central bank announcements, data, you've got to be aware of that. Obviously, we're pretty sideways here as you look at the time frame right now. But again, you have to think about the time right now. Pretty choppy for the most part. But again, still kind of the end of summer, holiday, things like that affecting it. Obviously, if you're a short-term trader right now, you're focusing that the banks in England are closed because they're not open yet, obviously. And definitely the banks in America are closed. So you have to remember what your trading time frame is and what's going on around the world, what pair. So you may not want to be trading this pair right now because it's kind of in a no man's land as far as getting data from economic calendars and equity markets because they're closed. So a little bit of movement, though, as you can see, as we've come off, but again, pretty tight range over the past few days as you're looking at that. We had Monday's trading, we had Friday's trading, pretty tight range overall. Interesting to see where it goes from here, what this is doing, but easier to see that there was some resistance up here at this 1.57-ish area, and that might have been a play. But again, it makes sense from the longer-term standpoint that you're using those longer-term charts to understand that major resistance level. As far as any other technical analysis that we can put on, I'm not really sure I'm seeing too much. The only thing I could think of would be a retracement. If for some reason the market started to come back down, the pound started to retrace, you could kind of draw this to see if it's going to retrace, because the last time we were up here, we retraced back down all the way down to the 47 level, so about a 10 penny range. So we backed off about 23% from this move down here at 47 up to 57. We've retraced a couple hundred pips. That makes sense. 250 pips roughly would be about 25% of a 1,000 pip up move. So we'll see what kind of support lines come in here. The next thing you might add in would be some moving averages to show you, longer term retracements lining up with some of these Fibonacci retracements to see if there's any moving average support. So keep in mind, in the U.S., yields have been ticking up, but even though yields have been going up, that hasn't stopped the pound from strengthening. But if we got rhetoric that the ECB or the Great British Pound or the Bank of England, the Bank of England was lowering interest rates and the U.S. is getting ready to end that cycle, that might change this, and that might give us a reason to say, hey, I'm not so sure about this support line. I think the pound could break. I'd rather be short the pound, and then eventually I might look to get out of those shorts or buy the pound if that move actually went down and it became where I thought maybe the pound was oversold down here based on fundamentals, based on technicals moving. So again, that's why it's so important to stay in front of and aware of that economic calendar. All right, so back to the slides. Again, I think that trading plans stem from understanding the long-term trends, long-term support and resistance levels. So to review fundamental events, macro and micro events. Macro are central bankers talking, and political events and things like that. Micro events are obviously just the economic data set from each specific country. Technical analysis, we talked about the trend, support, and resistance areas on the pound US dollar there. It should say the pound US dollar. And we also were able to look at some additional technical tools there with some Fibonacci retracements and drawing some additional trend lines. So the next slide here, the next webinar should be in a few weeks. Same thing, a fundamental catch-up, a technical catch-up. Main topics still to be determined. You know how to get a hold of me through email. You know how to get a hold of me on dailyforextradingedge.com, where I post quite often. And then you can review many short videos, tutorials like this on the Interbank FX YouTube page. And then again, you have my website all the way there at the bottom. So with that, I thank you very much for your attendance and look forward to seeing you again for another webinar down the road. And as always, happy trading and invest intelligently.